Hi guys, I'm back again with another video. So I remember that I did say that we're going to continue with the fundamental analysis and also cover other news events from other countries or nations, if you may, right? But I want to first start here because I don't want to start this video might be too long because the news events, they're probably the same. So I don't think there's point. I will cover them, but I don't want to start with them because they are not much of importance, right? So let's get to the video, guys. So we have tools of fundamental analysis, like we do have tools for technical analysis, right? So when it comes to fundamental analysis, right? Fundamentals do not determine market direction unless the market initially was favoring what. So let's say the market was selling, then the fundamentals come and make the market go further down. So I believe that, or I take that as if the fundamentals were predetermined to be in the same direction as with the technical analysis of price action, right? But naturally, fundamentals do not determine market direction, right? So now that we clear that out, let's go forward. So we have this tool, which is applications that we read for news. So one of the most popular ones is your investing.com, your daily FX, which I did show you when I was showing you the economics calendar, my FX book, and your CNBC, right? However, I want to highlight that I'm not really much familiar with my FX book and also CNBC, but I do hear a lot of people talking about those two apps, right? But I am much more familiar with investing.com and daily FX, right? But they are all apps that sorry, that people use for fundamentals, whether it's economics calendar, to see like analysis from other analysts, right? So that's a tool that people use to read fundamentals. So there's also pending orders, guys, right? So when it comes to fundamentals, it's totally up to your choice, but it's advisable that you make use of buy stops and sell stops, because when they are fundamentals, there are a lot of spikes in the market. Right. So if for those who don't know what is a buy stop, so a buy stop is an order on your MetaTrader 4 whereby you say to the market or to the broker that if the market is to, or if you're predicting that the market is going to go to the upside, so instead of entering that market instantly, you would rather set your price, or you would rather order your broker to trigger you into a trade, into a certain price, so that by the time the market reaches that price, it will trigger you into the trade, provided that you're expecting the market to go to the upside. That is a buy stop. And a sell stop is you saying to your broker, at a certain price low, trigger me into the trade at this price, provided that the market is going to go to the downside. So those are the two, and also the distinctions or differences. So also, guys, we can't talk about fundamentals and not talk about technicals. We can't talk about technical analysis and not talk about fundamentals. We use them interchangeably, right? So there is an aim, guys, for like I always say, that whatever tool that you put into your charts technically, right, whether it's a trend line support, there must be an intention behind you putting it in that particular area or zone. For example, what I'm talking about is you can't just put a resistance anywhere, but there are price levels where it is favorable for you to put a resistance. To add, it does not end there. You must know how are you going to utilize that support or that resistance. Are you going to enter at the break of that support or resistance, or are you going to enter when the market reaches it and go short if it's a resistance and go long if it's a support level? So that's what I mean. So the aim of using these tools is to understand the market conditions. So when you read news, whatever, you're trying to understand what's happening on a global scale, right? Because it's a global scale, we need to understand what's going on in Europe. We also need to understand what's going on in the US, right? So then we combine the news, the pending orders, and indicators. So I don't know much about indicators. I just know them by names, right? But you have your moving averages. But I just had hear people talking about the cross, when the other indicator crosses the other one. But to be honest, I don't follow, and I don't really I'm not informed that much when it comes to indicators, but I did include them because there might be people who are watching right now who do make use of them, right? So, and also technical analysis. And the ultimate goal of analysis, whatever analysis, is for you to find entries, right? That's the ultimate goal, guys. So let's move forward now to the $1,000,000 question. So the $1,000,000 question is how to trade the fundamentals, because it's pointless to understand what is fundamentals and not understand how to use the fundamentals. So there are two parts. I'm going to do this one, then this is the last one, right? But I want to do this for like in the last part so that I can also show you all together into the actual chart, right? But because I'm not going to in this video, let's rather focus here and then also into the news events according to country, right? So how to trade the fundamentals, excuse me. Pick news events with high impact that can be determined by means of these apps like your investing.com on, and also the economics calendar. So not on the economics calendar, I made a mistake there. But economics calendar is one of the built-in tools that you find in these apps, right? And then they are also in a real time, guys, in South African time. Don't make the mistake I did, thinking that at that time was Canadian time or something. No, it's actual time in South African time, right? But you must, so yeah, guys, pick news events with high impact. Then when you have done that, you need to find a currency pair or an index that will heavily be affected or relevant to the event and take the advantage of the market spikes. So for example, with the FOMC, hike the interest rates, because it's currently that period now, inflation is still a thing. So the banks are hiking the rates or increasing the interest rates to make things like borrowing, like credit, to be expensive so that people don't borrow more. You know what I mean? And to be honest, guys, what I took away from this whole thing that's happening is that it's funny how the economy works, because the labor market in the US, according to the FOMC, is booming, right? But inflation is high. So it's a good thing when jobs are being created. But the downside of it is that people have money to spend and it increases inflation. At the same time, it's not a good thing when the labor market is not doing quite well, because people are struggling for jobs, and then that means poverty, right? So that's why I'm saying that it's kind of it's paradoxical how the economy works, because employment must not be that high because it results to inflation. At the same time, it's not a good thing when people are not working, if you know what I mean. So when I was watching the speech, I heard the Jerome Powell, right, which is the president of the FOMC, right, committee, saying that they need to bring the supply side and also the demand side policies in about the same level. And if you remember, guys, on the video I made about the CPI, remember I said that the PPI, which is the producer price index, is high. And the people who compensate, the manufacturers or the people who provide services for the costs that are high, for because the PPI basically means that if it's high, the manufacturers or the service providers, they get costed a lot more to produce the things that they produce. And the way it works, or for them to be able to make that revenue back, the people who will pay for the price is the consumers, which is through prices that are being raised. And then because you also talked about like price stability, because prices are high and people can't afford. So that's another thing that he highlighted. But anyways, we need to find a currency pair in index that will heavily be affected. So for example, as I was talking about the FOMC, like I did show you on the previous fundamental analysis video, that interest rates are going to be hiked. So that's going to affect the dollar, right? So I'm talking about your USD CAD, USD Swiss, USD JPY. And then if we're talking about when the US dollar is a code, we're talking about your Euro USD, JP USD, Gold, OD USD, NZD USD, and so that's the second point. And then, guys, remember I told you that when there are news, I don't really have to read the news. I can just know by reading price action. So you can see that there was a fundamental involvement by means of those long candles. So those are the market spikes, and also those one with the long wicks. That's when the news are involved. So the third thing that you could do is trading major currencies. Your USD JPY, Euro USD, GBP USD, what else? Odd US, nah. Oh yeah, Odd USD, NZD USD, but the pairs that have got the USD in them. So those are the major currencies. Than trading what pairs that have high spreads, like your Euro GBP, like the crosses, because if you don't have a major currency, you have a cross. So it's rather or preferable to trade a major currencies because they have low spreads, and also depending, guys, on your account size, because you don't want to hit your account size, right? But because fundamentals can make you or break you, if you understand what you're doing and or experienced enough, you can profit a lot from fundamentals. And then at the same time, or contrary to that, if you don't know what you're doing, you can still lose a lot more if you don't make use of stop losses, because the candles are that long, and then there's market volatility that particular time, right? The price just changes quickly. You can make a lot of money, you can also lose a lot of money, right? So the second point that, or the thing that you could do is wait for candlestick closes, confirmations favorable to one's trading style, e.g., news trading is not compatible with swing style of trading because as the market are only present, what did I say? Yeah. As the news are only present for a short period of time. All right. So remember I did say in the previous video that news or fundamentals are only for a short period of time. Those spikes, you don't really find them consistently. You only find those long candle or those spikes in the midst of the news. So it's only for a short time. We can't be talking about swing trading unless, of course, the market was intending to go in that direction and then the fundamentals just come in and push it through the direction it was already headed to. You can swing, but naturally, fundamentals are not favorable with swing trading style, right? So let's move back now to the news events according to country. I hope this made sense, guys. So we have your Great Britain, right? I'm sure every one of us, when they were starting out, they had something about the Brexit, right? Which I did try to explain in the last video. So Brexit, the BR stands for Britain. The exit means exit. It is when the Great Britain stopped or exited from the European Union, and rather the good word is they withdrew from the European Union and founded their own currency, their own policies, their own economical stuff, right? Hence, they are using the pound. Then the countries that are in the European Union are using the euro, right? So we have your Bank of England. It's responsible for interest rate decisions, for economic growth, or to even slow down the economy, because interest rates work in two ways, guys. When the interest rates are hiked, then that's an economic growth in a way that foreign people are more lured to invest in that country. At the same time, interest rates hikes are not necessarily a good thing towards the country's citizens, because it makes things like borrowing money expensive. That means if you have a loan, you find that you would pay a lot of interest in that loan, right? So that's what I'm trying to say here. That is rather my understanding of how this whole thing works, right? Please don't judge me, guys. I'm trying here, eh? So we have your CPI in the retail sales, which is what's currently going on now. Inflation is still a thing, guys. Still a thing. There's high inflation. Hence, inflation needs to be controlled because it can't be that high. Because then, if it's that high, that means people are going to feel the pinch. We can't even afford the basic things. So that's not a good thing, guys. People need to at least afford the basic things that we cannot live without, right? So the currencies that are most affected is your GBP USD, Euro GBP, right? So let's move forward now. So moving forward, we have your Australian economic events. So you have your employment change, right? So that's one of the important stuff that moves the market from the Australian side of things. Then we have your GDP, which is the number of goods and services produced within the boundaries of the country per year. Then your CPI and retail sales, that's your inflation. Then the currencies that are most affected is your odd JPY, which is, I differentiated this into two, which is the particular currencies where the Australian dollar or any other currency is a base, and also when it is a cross. So when odd JPY is a cross and then there are news events, currencies that are most affected when the odd is a base, it's your odd JPY and your odd USD. When it's a cross, it's your Euro AUD. And not gold. I included gold there because Australia as a country is one of the exporters of gold, right? So that's why it's here. It's like the CAD and the oil, crude oil. So that's the relationship. Then let's move forward. New Zealand, just your NZD. So you have your employment change, because remember, guys, also another thing that I noticed that there's some relationship between the NZD and the Australian economies. Because even in the way they move in a similar fashion, right? So I'm pretty sure that any of you did notice that. So we have your employment change, which is your report on the employment change, CPI, inflation. Currencies most affected is your NZD USD. It's also a major currency. Your NZD JPY, also known as Kiwi. Then your Euro NZD and your GBP NZD, right? So let's move forward now, probably to the last one. Yeah, the last one is your Canadian economic events, which is we have the CPI there. Consumer spending and consumption also forms part of inflation. Employment change, report on the number of jobs created and lost. The Bank of Canada, which deals with the monetary policy, oil prices, economy of the country, inflation control, and the economic growth, right? So for example, in SA, we have the South African Reserve Bank, yeah. So we have currencies most affected. So the first one is USD CAD, your CAD Swiss, your CAD JPY, WTI, WTI crude oil, and your Euro CAD. Because there is a relationship between USD CAD and Euro CAD. If you notice, like the way they move, and also USD CAD, guys. Even though we have the DXY, and also the currencies with the USD as the base currency get to be affected, sometimes the DXY does its thing and USD CAD just does its own thing. So USD CAD, there's a love-hate relationship between DXY and USD CAD, because USD CAD sometimes does what it want to do, whereas you find that your USD Swiss, USD JPY do something that is in correlation with the DXY, because the dollar is a base currency, right? So yeah, guys, I think I've now reached the end of the video. I will continue where I left off, which is on the final part of how to trade the fundamentals, and also show you on the actual chart how to spot certain things. So if you watched up until the end, please do me a favor, guys, comment down below, hit the subscription button, like the video. I will see you on the next one.